The infamous 99%. The talking point of the Nova Scotia government has been 99% of the money is being paid directly to companies that don't owe taxes in Nova Scotia. In order to understand what that means, we have to look at how films are financed. A film requires investors, and investors will not come to the table unless the film is owned by a new company created specifically for each project. These are called single-purpose companies. A new company is a guarantee for the investor that its books are clean, and there's not a cleaner company than a brand spanking new one. An investor would never put money into a film project owned by, let's say, a 20-year-old company, because there would be 20 years of finances to sort through just to make sure it isn't on the verge of bankruptcy. Financing a movie works like this. We take our movie with its budget of $1 million, we create our single-purpose company around that movie. We calculate our Nova Scotian labor and estimate the tax credit, and then use that tool to attract investment dollars from outside the province. We then spend the money and make our movie. And if we've done everything correctly, we come to a zero balance. The money that comes in from investors equals the money that went out to the movie. This zero balance is crucial for the investors, as they can see that every dollar they've invested has gone directly into the film. Each single-purpose company is owned by a parent company, and every time this parent company makes a new film, they have to create a new single-purpose company. So let's go back to what they're saying. 99% of the money is being paid directly to companies that don't owe taxes in Nova Scotia. Well, the tax credit rebate goes into these single-purpose companies. And yes, these single-purpose companies will never owe taxes because they were designed to balance to zero. So yes, this statement is true, but it is misleading. There is an implication here that when we make films, we exploit some kind of tax loophole, when in fact, setting up a single-purpose company is industry standard, and the entire corporate structure pays taxes at every level. Every dollar of labor is taxed. Every dollar we spend on goods and services is taxed. Every dollar of revenue is taxed. And yes, the parent company, which owns this single-purpose company, also pays tax, as does the parent company's employees and owners. This is not a dodgy business practice. Single-purpose companies predate the film industry and are used around the world in many other industries, including shipping. This structure is designed for investment to minimize risk and maximize transparency.